Hey guys, today we're going to talk about why you should form an LLC for your small business. Forming an LLC is an easy and inexpensive way to structure your sole proprietorship or small business. Below, here is what an LLC will and won't do, and when you should consider forming one. If you have a business, either a sole proprietor or a partnership, you should seriously consider setting up an LLC. It will provide you with similar legal protections to a corporation, but enable you to run your business as a small company. An LLC is an abbreviation for Limited Liability Company. It's a business structure that provides a business with limited liability, similar to a corporation, but a structure is easier to establish and simpler to maintain. It also provides the business with a pass-through treatment of income tax for tax purposes, similar to that of a sole proprietorship or a partnership. This is where the term limited liability in LLCs comes from. The LLC provides protection to the LLC owners by limiting the owner's personal liability. Generally, this means that business debts owed by the business and other claims on the business, including liens and lawsuits, are unlimited to the assets of the business itself. Those holding such liens against the business cannot pursue the personal assets of the business owners in most states and under most circumstances. This protection, however, does not extend to legal acts committed by the owners of the LLC, and can also be lost in the case of certain instances of negligence on the part of the owners. So right now, we're going to talk about the pass-through treatment of income taxes in regards to an LLC. Unlike a corporation, an LLC is not considered to be a distinct entity for income tax purposes. The owners of the LLC reports their operating results, including profit or loss, on their personal income tax returns, just as they would as either a sole proprietorship or partnership. There is no tax return filed specifically for the LLC. Setting up an LLC is a pretty simple process, especially compared to setting up a corporation. It's actually a multi-step process that looks something like this. First, you have to choose a business name. There are two considerations here. The first being to choose a name that doesn't duplicate that of an existing LLC in your state. Your state will let you know if the name you choose is acceptable. The second consideration is that your business name must comply with state regulations in regards to LLC names. Generally, this means that LLC or limited liability companies must appear in your business name. There may be other requirements dependent upon the state where you're attempting to establish your LLC. The third step is to create and file the articles of organization. The name of this document may be slightly different from one state to another, but it is the basic document that establishes your LLC. The article can be quite simple. In fact, your state may have a standard form that will enable you to fill in the blanks. The information requested will be simple and basic, such as your LLC name, address, and typically the names of the owners of the business. In some cases, each owner will be required to sign the document, but in others, a single owner can be appointed to sign alone. Lastly, you're going to appoint a registered agent. Most states require that one person act as the registered agent for the LLC. The registered agent is the person representing the LLC and is designated to receive any legal documents relating to a lawsuit. A registered agent is typically one of the owners of the LLC. And lastly, payment of the required fees is very minimum. The amount of fees required to register your LLC will depend upon the state where you live. It can be as little as $100 in some states to $700 in another. In addition, some states might require to publish a notice of intent to create an LLC. This is a requirement in certain states like New York. Your state may require that you publish a legal notice in your local newspaper announcing your intent to form an LLC. The newspaper staff should be able to assist you in creating notification. You may be required to publish the notice several times over a period of weeks or months, after which you may have to file an affidavit of publication with the state. If you need to launch your LLC quickly, publishing this type of notice can delay the process. Be sure to check with your state to see if this is a requirement and if it allows plenty of time to meet the requirement. Lastly, to create an operating agreement is very straightforward, but sometimes it's kind of complicated. This is probably the most complicated part of creating an LLC, but the good news is that the document is not necessarily required to file with the state. Still, you should always create an LLC for your LLC to avoid conflicts later. Even this document could be relatively simple and does not necessarily need to be prepared by an attorney, although it's never a bad idea in the case of an LLC with multiple owners or using a CPA. The purpose of the operating agreement is to spell out the rights and responsibilities of each owner of the LLC. It is very similar to corporate bylaws or to a partnership agreement, which are largely intended to provide a framework to deal with conflicts or with the transfer of ownership between partners, both existing and new. The operating agreement should provide for owners' rights and responsibilities, voting power, percentage interest in the business, including divisions of profits and loss, and a schedule of owners' meeting. A very detailed operating agreement may even include management responsibilities between several owners. Probably the most obvious advantage to forming an LLC is protecting your personal assets by limiting the liability to the resources of the business itself. In most cases, the LLC will protect your personal assets from claims against the business, including lawsuits. This enables the small business owner of sole proprietorship and partnership to gain the limited liability protection similar to that offered by a corporation, without the costs and complexities that corporations bring. For example, under an LLC, you will not need to file separate tax returns for your business. Your income and expenses will continue to be reported on your individual income tax return, either on your Schedule C for sole proprietorship or a Schedule E for real estate partnerships. Still, another benefit is something of a soft advantage. Having an LLC or limited liability company in your business name can make your business seem more official. It implies that your business is registered with the state and is somehow substantiated as a legal entity. If you have a small business, either a sole proprietorship or partnership, you should take a serious look at creating an LLC. This will enable you to gain permanent legal protection for your personal assets without disturbing the management and income flow of your business. I know this video might seem a lot for you guys who are just, looking to start a business and not really too sure. If you guys want to talk with a CPA and walk through your options, feel free to email me at busayo@bigappleaccountingcpa.com or call 646-572-8621. Thank you.